Hello, everybody. This is your host, Christian, and today we have Marcus. Marcus, welcome to the Ledger Show.
Hi, Christian. Pleasure being here.
Marcus, you're the CFO and co-founder of ecoligo. What do you do there?
So first of all, that's correct. And as a CFO, I'm looking after the financing of the company. In our case, that means like the classic functions of a CFO, which means looking after corporate finance, accounting, controlling, etc. But what is really the exciting thing at ecoligo is that we do a lot of project finance as well. So we are financing solar projects all over the world. We do this via an online investing platform, and managing all of this is a very big part of my responsibility as well, which makes the job quite exciting and quite unique because it's a super big variety of different tasks and different challenges that we have faced, which make the job super exciting.
Because you're one of the co-founders, how did you come up with the idea of starting ecoligo?
Yeah, so basically it's coming from experiences that both my co-founder and I had in previous jobs. So for me, it was so I actually started my professional career in Kenya in 2010, first working in the carbon credit sector, then later joined the German Development Corporation, GSZ. And I learned a lot in this young Kenyan market on renewable energies. Back then, it was only a handful of people doing something, but I got exposure to the very big projects, such as the Lake Turkana wind park, which is a super big wind park in Kenya, and also to smaller solar projects. Was also involved in the first two solar projects that got connected to the grid in Kenya. The really pioneering days. I learned a lot. We had a lot of successes and managed to get first projects off the ground. Um, the challenge, though, that I realized in this role and also in a role that I had later advising German renewable energy companies to enter the markets, amongst others in Kenya, but also in Tanzania, Ghana, and Myanmar. And it was always the same challenges. So the companies have been finding partners quite easily, have been managed to also implement first pilot projects. But then the question was always, how do you upscale this? And it was always a problem of finance, because in these markets, you have like the typical financiers, such as development banks, you have some private equity and so on. But all of them are only looking for the multi-million dollar size projects. So everyone you can approach if you have projects with ticket sizes of 10 million and above. The problem is what happens to all these projects that are smaller than this, and this is actually where the market is. It's an issue. It's a general finance gap that is observed here in the market, not only by myself, but also of other people in the industry, where I've then come to the conclusion with the current setup and the current financing sources that you have available in these markets, such as Kenya, but also applying to other emerging markets, you cannot finance medium-sized solar systems. When I say medium-sized, just to give an understanding for the listeners, it's typical sizes of financial volumes of around 100,000 euros up to 5 million euros. So that's typically the spot where there is not really attractive finance available. And that has been basically my takeaway back then. So seeing there is a lot of potential, the market and the economics are working. It's a matter of the financing, and you need to come up with an alternative solution. And that was for me then the point where I decided to leave my previous job and starting ecoligo in order to address this finance gap. And what we did with ecoligo was that we have set up a crowd investing platform, ecoligo.investments, where we are financing solar projects in emerging markets. And via this project, like private individuals, retail investors can invest from just 100 euros, get an interest rate of between 5 to 8% per annum. So really attractive for the retail investors, and at the same time closing this finance gap that we see in emerging markets.
Okay, so that's pretty interesting. So you deploy basically solar plants directly to factories or kind of medium-sized industries directly in foreign countries, right? So you take care of the basically financing and also the construction.
That's correct. Yes, we take, and that is also a key differentiator to other financing platforms. So we don't understand ourselves just as a platform. So we do not raise money from retail investors and then on lend to a third party, but we are really the party executing the projects, which first of all means that we have in each and every country that we operate, we have a legal entity, and we also have people on ground. And these people on ground oversee the sales and also project implementation. The actual implementation, so the construction of the solar systems, the installation, that is done by our trusted partners. So we qualify partners in the markets that do then the installation. So this is an approach that we have been taking because we said we as ecoligo, we want to focus on the scalable parts of the value chain. Whereas the manual work, so really the manual installation work and the manual maintenance of the system, so all the manual work we are outsourcing to trusted partners. And that has been working quite well. So we have in all the countries where we are active, we have a good number of partners that also bring us new clients that we are working with and getting the systems installed and having the systems smoothly operating and maintenance if needed.
Just to give, just to understand like the size of this business, like how many gigabyte of solar plants you're managing, or maybe I don't know whether it makes more sense to share the volume of financing that you did. Like,
Yeah. For the ones that where megawatts is a number that they are familiar of. So we have 30 megawatts currently under operation, another 30 megawatt in construction, and then we have another almost 40 megawatts that is freshly signed. So you can see that the business is also growing quite nicely. So that brings us to a total of close to 100 megawatt that we have in contracts signed already. To give an idea, like 1 megawatt corresponds to around 700,000 euros in financial volume. And we have so far via the impact investing platform, we have raised 31 million so far. On top of this, there is some institutional capital coming, but the majority of it is raised via retail investors via the impact investing platform.
how complex is it to run like solar plants? Because you need to do that at scale.
Yes.
It's not just okay, we're going to do a single deployment in Kenya and we're going to have a gigawatt of solar plants. It's like you have multiple plants all over the country.
Yeah, that's a very good question. That's exactly, I mean, the answer to this is that for this reason, we have decided to go for solar plants because solar plants are really easy to maintain and you can scale quite quickly. Because, like very simply put, the sun is shining everywhere, especially in the global south. You don't have issues here of the sun not shining. You do not need to look for perfect wind conditions if you want to install a wind park. So wind parks are very site specific. If you want to go for biogas plants, you need to have the feedstock available, and the feedstock needs to have a certain quality to run your biogas plant properly. But solar you can implement everywhere. The only thing that you need is a little bit of space. And mostly we go on the rooftops. So on the rooftops of our clients, so this can be a factory, this can be a flower farm. We also have universities as our clients, so a big portfolio of different clients. But actually, none of them is having the issue that there is no space available. So there's usually roof space available that we can use. If that is not available, there's space on the ground available where you can install the solar system. So it's quite easy. Then solar is really pretty much state of the art. So there's nothing like super complex from a technology point of view, and it's also super easy to maintain, and that makes it really scalable. What the challenge is, nevertheless, of course, you need to build a structure as a company that allows you to do thousands of projects. I mean, doing a handful of projects is easy, right? I mean, this everyone can do. You can stay manual in the beginning in your processes, but at some point you need to you need to reach the point where you really set up for the scale, which means that you need to do a lot of standardization. We have done this from the very beginning, so all our contracts and everything is really standardized, and there's just the commercial terms that are changing, but the rest is really standardized. Then it's a lot about process standardization, and here also software development is helping. So we are developing software that we call Pulse, which is our ERP system, which is basically digitizing all the steps that we are having from the sales to offer generation to then clients and monitoring the system and really covering the whole value chain from sales over financing and then asset management. And that is really key, and that is from our perspective also a key success factor. And if you compare this to some of our competitors, where you really know that they are working with fairly simple Excel sheets, then manually copy pasting numbers from there into a Word document that goes out as an offer, no automation, and then it takes them 2 or 3 weeks to give the clients an offer. In our case, that's fairly simply done with a few inputs and a few clicks, and then the offer file is generated and can be sent to the client.
When you say a sales offer, you mean to install solar plants on top of a factory, for example?
Yes and no. Yes, the
Okay.
solar plant is the product. What we are basically selling though is the power. So we don't sell the solar system to the client, but we sell the power. And that is just to give an example. So let's imagine we have a flower farm in Kenya. That flower farm, the owners of the flower farm and the managing directors, they won't have an interest to run a solar system. They also don't want to invest into a solar system because they have certain hurdle rates that define that they can't do investments with payback periods of more than 2 or 3 years. However, a solar system has a longer payback period. But what they are interested in is cheap power, and that is exactly what we give them. So we take care of the solar system. So the solar system is also in our books. So it's our asset. It's installed at their roof, but it's our asset. It's on our balance sheet. And we are selling them the power that is produced by the solar system, which is cheaper than the power that they currently consume from the grid. So they don't have any hassle. They don't need to take care of the installation of the system, don't need to take care of the insurance, don't need to take care of the maintenance. All of this are steps that we are doing, and they just benefit from cheaper power. So quite easy no-brainer deal for the client in the end.
I mean, this is super interesting. I already have a lot of questions like thinking about this also because of the current like interest like market with the fact that borrowing money is getting more expensive. So I'm just curious how it's going to modify your business model somehow. But one of the things that you shared when we had the first conversation in the beginning was that you're a fintech enabled clean tech, and that's a super interesting like way of defining what you do. Can you share a little bit more about this?
Yes, sure. That is a question that we often get also when talking to investors. So, how do you define an ecoligo? Because it has these different elements. It has a fintech component, the impact investing platform, where private individuals can invest and get a return. And then at the same time, it has though the operation of assets of solar power plants in emerging markets, which is on the cleantech side and really leading also to a direct CO2 savings. So it's not a kind of a platform where you have CO2 compensation measures and you get a promise that there's somehow CO2 saved, but it's really always this direct CO2 savings. And what I always like to say is that we are fintech enabled cleantech because we are using the impact investing platform and it's an elemental piece of our business model. But the ultimate delivery is on the cleantech side, right? The ultimate delivery is that we are installing solar systems all over the world. We are having CO2 savings here, so we are having impact by doing that part of the business. And the fintech side is basically the enabler for this. So you can see the retail investors as the enabler to have a positive impact on the world. And that's how we understand it. And that's also what the impact investors on the platform, what they appreciate and why they invest into the projects. And for them, it's of course super nice to also have us taking care of the execution of the project, right? It's not a platform where they just invest money, but they know ecoligo is also taking care of the systems and taking care that the assets are running smoothly and the project generating the returns.
I have two questions. Like, first one, it feels like your main ability is to deploy capital in the sense like you get capital from people and then you create solar plants and you manage solar plants for them. Do you think that the crowdsourcing part is going to change in the future because maybe you need more capital than what you can actually get from the crowdfunding platform?
Yeah, it's like the typical challenge that you have in two-sided models, right? You always have supply and demand that needs to be balanced. And we had when we started with ecoligo, we had the situation that we did not have enough projects, which was leading to, in the end, you can see it as an empty online shop, which is a situation that you should avoid when you have an online shop because we had investors that were keen to invest and we couldn't give them any offer to invest. Um, Luckily, this has changed. So nowadays, we have enough projects. We are rather having the opposite problem. We are not scaling fast enough on the impact investor side to satisfy all the needs that we are having on the project finance side. So it's a good thing in the market, first of all, that the world has realized they need to go solar, and we are really having a lot of client demands, which hasn't been the case when we started ecoligo. So we can really see this shift in the world, and of course also us being in a position now to show clients like we have done all these projects already, more than 100. Go and see them, and that's of course much more convincing to clients than if you start as a company and you don't have zero references. So what is the challenge for us is, as I said, now to really also scale on the impact investor side. And there's two things that we need to do here. First of all, we need to increase the amount of impact investors that are coming to the platform. So it's a typical customer acquisition question. And then secondly, what we do in addition is we are building second pillars for the financing. So we are also working with institutional investors, have onboarded the first ones already that are co-funding next to the retail investors. And this is allowing us to have, so with the institutional investors, we typically have them credit lines over a certain size. We can draw from the credit line, so it gives us quite some good flexibility and also speed in funding once the credit line is signed, because we can then draw down and use the money in particular for the bigger projects.
Makes a lot of sense. And then the other things that you mentioned is that about the CO2 reduction. So when you install the solar plants, you have a clear CO2 reduction. So I was wondering if also carbon credit is something you're considering to.
Yeah. So first of all, on the CO2 reduction, that's indeed like our main KPI that we are tracking. So currently, with the projects that we have signed, they will generate over the lifetime of the solar systems CO2 savings of more than 1.5 million tons. So that's a quite significant impact that we have achieved already. The challenge, though, is at the moment we cannot get this certified. Well, I wouldn't necessarily say it's a challenge. It would be a nice additional revenue stream. It is not needed, though. And that is also exactly the reason why you can't claim carbon credits for it, because the carbon credits, by its nature, is defined that you need to fulfill a so-called criteria of additionality, which basically means that if the project would be materialized also without the carbon credits, then it doesn't fulfill the criteria of additionality, because then it would be implemented anyhow, and the CO2 savings would have happened anyhow. And this doesn't justify you to get carbon credits. So you can see this as I mean, some see it as illogical because in the end, CO2 savings are great in any case, but there is still some sense in it, right? And the financials of our projects are fine, so there is no need to have carbon credits to make them financially viable. That's also the reason why you can't claim them.
Makes sense. Um, Another topic that we discussed, like during the intro call, was the risk of operating in emerging markets. And like, given that you work in different emerging markets, like, how do you mitigate the risk? Like, for example, currency.
Yeah. Yeah, that's also a nice question that we hear quite often from investors because we are quite spread over the world, right? I mean, we have operations to drop some countries: Kenya, Ghana, Vietnam, Philippines, Costa Rica, Chile. So quite spread over the world, different time zones, and of course you can see it as if you see it from a negative way, then you could say we are spread quite thin and we need to manage operations in all these countries in completely different jurisdictions with different regulations and so on. Um, it is though in practice, there is a lot of benefits from it that outweigh the negatives by far. And especially this was proven when COVID has hit because we have seen in some countries where really nothing was going. So it was complete standstill, no additional sales, and we didn't sign any project in these markets. Whereas other markets like Vietnam, for example, were booming, and there was a complete run in 2020 on solar projects by clients. And was really, really beneficial for us as a company because we could outweigh some markets that have not been performing. We could outweigh by other markets that have been performing super strong. Um, and the in practice, so although you might think like all these markets operate quite differently, in the end, if you do solar C&I, and C&I is the abbreviation for commercial and industrial clients, so commercial industrial sized systems, which are typically rooftop systems, it's fairly standardized, right? I mean, you're talking to companies, you're talking typically to industrial sized companies, and the way they are thinking is quite similar all over the world. They want to reduce their operational costs. They don't want to invest into a solar system themselves because they don't have any expertise, but they of course want to benefit from cost savings on the electricity side. So the thinking and the sales process is quite the same. Also, from a regulation perspective, it's in most countries almost the same regulation. There's in some countries there are some nuances that make it special. Some markets, for example, you can sell surplus power that you are having from the solar system. For example, if the client is having not so much consumption on Sundays, then you can sell the surplus to the national grid. Other markets you can't do this, but that's more nuances. But in the end, it's always the same, and that makes it also scalable, right? Because you can implement the same business model in each and every market. You may need to adjust your contracts slightly to market specifics if there is anything special in the regulation. But overall, it's super scalable and it's the same thing. And that's also what makes it exciting and where we also have quite some nice learnings. And if our colleagues from Costa Rica talk to our colleagues from Ghana, there is a lot of similarities how to approach clients and what the selling arguments are. So there's a lot of similarities and which makes it scalable in the end.
And I think that the counterpart of this is how do you protect your returns because you're operating in a different currency? Or how do
Yeah.
you get paid by the energy that your customers, the owners of the factories, are paying you back?
Yeah, yeah, thanks for the reminder because that was the part of your question that I didn't answer before on the currency. So we raise the funds in euros from crowd investors, and we get paid from our clients in hard currencies, either in euros or in US dollar. We don't get paid in local currencies. So if we have clients in Kenya, for example, They pay for the power typically in euros, some in dollars. It depends a little bit on the revenue streams of the client, but it's always in hard currencies. So we don't have the currency risk here between the local currency and the euro. And this is really a key thing because local currencies are in some markets fluctuating quite significantly, and hedging is almost not possible. Well, it is possible, but not possible from an economic point of view, because then it becomes quite expensive. Like for example, if you try to hedge the Nigerian naira or the Ghana cedi, you're paying a markup at least 20 percentage points on the interest rate on top of the normal interest rates in euro. You pay just for the hedge. So you come up with all-in costs then of 25% or more, which is then not making the deal attractive to clients anymore.
Okay. I mean, it makes a lot of sense. So I guess you're working mainly with clients that they're doing exporting, or they're working with one of the main currency you're working with.
Yes, typically a lot of our clients are exporting businesses or have some sort of revenue in hard currencies, or alternatively, yeah, they assess the risk of them having revenues in local currencies but needing to pay us in hard currencies. I mean, there's typically also the energy tariffs that they have from the utilities. There's also a currency adjustment here. In any case, they are exposed on the electricity side to hard currencies. I mean, in our case, they're really paying in hard currencies. If they get the electricity from the national grids, they pay in local currencies, but it's still linked in some way in almost every country to dollar versus local currency rate.
Interesting. I mean, I think you're sitting right at the edge of, the climate finance and like trying to help us like reaching the goals before the time is too late. How do you see like the landscape evolving, especially because you're working like in emerging markets?
Yeah, I think it's a unique spot that we are in, and I think it's getting more and more interesting. And I think the world is starting to realize that we have to do something, and the status quo can't be what we do in the future. And I think it's really interesting because it's the trends are happening on the retail investor side, but also on the institutional investor side. So you have big institutional investors that suddenly want to go invest more and more into clean assets, and there's a lot of divestment from fossil fuels. So there's a lot of money that needs to find its way into CO2 saving assets or companies working in this field. And that's trends that we see both on the retail investor side. So also if you see how stock funds or general the fund market, there's more and more appetite and more capital with really significant growth rates going into sustainable funds. And yeah, and the good thing is that also the institutional investors have realized it. So I think it's a super interesting market spot, and I think also and this is happening slowly, but it's happening that institutional investors have realized that the markets in Europe is not the one thing that they need to look at, but you need to address climate change from a global perspective. You need to go in emerging markets, and there's super big opportunities there because let's face it, if the new projects are not renewable based, every new power plant in these markets will be a fossil fuel one. It will be diesel generators, like huge diesel generators, not what we have, what we see here in Europe, for example, to power our garden or whatsoever. But it's huge power plants fueled with diesel or coal power plants, and that will be the reality if we don't manage to leapfrog to renewables and really rethink electricity infrastructure entirely. Like we need to get away from these centralized big power stations and then transmit power throughout the whole country. We can go directly to the consumers, put the systems on the roofs, and avoid big transmission lines and have the power produced there where it's consumed. So I think it's a really, really big opportunity that more and more investors are realizing, luckily. So which brings us in a quite good spot because I think we have been proven and shown that we are quite efficient and to manage to lead capital into the right places to have an impact and have direct CO2 emission savings.
Yeah, I mean, first of all, congratulations on that. Like, I know something about the European history about investing in solar energy, and I mean, they did this with a lot of, funds or contribution or credits. You install solar plants, you're gonna get some money from the government. But it seems in emerging country, it's just the opposite. It just makes sense from price opportunity. Like, it costs you less than using energy from, I don't know, from this local distributor.
Yeah, for sure. There are
And
significant savings if you go for renewables.
that's super interesting. And I guess that the majority of your funds, they come from European investor or investor that are located in Europe,
Even Germany. So
even
mostly
Germany. Okay.
like most of the money is really coming from Germany, and we have some from the institutional investor side. They are based in different countries. Like one of them is based in Singapore, for example. Others in the Netherlands. So there it depends, but all the retail investors, it's Germany.
So you can really leverage like low rates interest and deploy this capital in other countries where, like you said, maybe currencies are floating every month or every day.
Yeah, so the one benefit is that it's quite low cost of capital, and because you're basically cutting out all the middlemen, right? I mean, it's direct, you're getting the money directly. Else it goes that retail investors are investing in a fund, and there's fund managers and so on, and until the money is really put to work, there's a lot of entities in between that take away part of the money. And hence we have the benefit or need to earn money, and hence it's becoming quite expensive. So if you have the direct routes to retail investors, you have much more cost efficient capital. And then secondly, what is also quite important is the flexibility, because you are not restricted to fit your financing into a fund. Like if you raise money from a debt fund, for example, then the debt fund that you are raising money from might have an end period in 7 years. So they can only give you money that is lasting for 7 years. It needs to fit a certain repayment schedule, and that may fit your solar projects or it may not fit. It depends also on what the client wants. And what we offer the clients are contract durations between 3 and 20 years. And depending on what the client decides, we can really design the offers to the impact investors ourselves, how we think it's going well on their end. And in the end, it's of course also we need to make an offer that we can sell in the market. So it needs to be attractive to them. And from experience, we know that offering a 20-year loan for a project in Ghana is not what private investors have a lot of appetite for. So they rather tend to accept a refinancing risk than going in for a very long period of more than 10 years. But that's learnings that you have, and then you can structure your deals accordingly, and then you have a really, really, really tailored finance to your needs, which makes it super attractive for us. And it also
Really
goes
feels like
super
you,
fast, right? I mean, some projects we put
yeah.
on the platform, they are eaten up in 2 or 3 hours. That's amazing.
Okay. So you mean like actually investor clicking, okay, I want to invest in this.
Yes. So there's really a lot
Okay.
of appetite, and it's always great to see if we put projects on the platform and there's such a run on it that they are full on the same day, and that's that's exciting, and that's also creating a lot of joy because you're feeling you're not sitting in this boat alone here and trying to save the world, but there's more people that think the same and also want to contribute to it. And I think that's really encouraging to see, and that's also making every day here at ecoligo quite inspiring because we get more and more investors. We see that what we try to achieve here is what people really like, and that's really powerful.
You started 7 years ago, if I'm not mistaken, right?
Correct. Yeah, we just had
Yeah,
our 7 year anniversary a couple of weeks ago.
yeah. I mean, hopefully we are lucky that saving the world is becoming mainstream, so you're getting some help finally.
I hope that it's getting mainstream. I mean, that's what the planet needs, I guess.
Yeah. So, Marcus, it's time to wrap up. Are you ready for a quick fire round of questions?
Yes, sure, sure.
Okay. So, what is the best piece of professional advice that you have ever received?
I guess it's getting the right people into the company as soon as possible. And when I say the right people, that can be sometimes costly. So don't be afraid of in the beginning when starting a company trying to look only at the costs of people and go for the rather cheaper ones. Really, people, good, strong employees make such a big difference. So don't be afraid of making a hire that might appear quite costly in the end. It's very often really worth the amount and creates a lot of value for the company.
Said from a CFO, it clicks even more. What book would you recommend to our audience?
Say again?
What book would you recommend to our listeners?
I would recommend listening to podcasts. So I'm not so much the reading guy, I'm more the listening guy. And there's a lot of great podcasts out there from online marketing rock stars, really to the podcast that you are hosting, the Ledger Show. So there's a lot of good podcasts out there. I think it's for me always good to listen to other founders, listen to challenges, because I think that's where I personally learn the most.
Because you mentioned this, is there a founder that you really admire, or that you're trying to somehow follow through his
No, I
journey?
wouldn't. I wouldn't say that there's one particular one. So there's often some elements and pieces that you take from individual people. There's a lot of people that we have started with in the Green Garage in Berlin, where we had our start, which we are still in contact, like Alex from Solar, like also partners that we are working with on the crowd investing side, from Portagon, for example, where we are exchanging, and but it's not like one particular person that I admire and where I try to be like them. I think it's for everyone. It's important to find the own way and own style of managing a company.
Makes sense. What's your main passion outside work?
I'm having a vineyard actually, so I'm
Okay.
growing my own wine. So I'm living in Stuttgart, and it's quite a part that belongs for me to the city, and which makes the city quite special. So we've bought a small vineyard, and yeah, for me that's really also great to go there after work and really being there, seeing the sunset, calming down. So it's the best type of meditation for me personally.
Nice. Red or white?
Both. We have
Okay.
Riesling on the white side and Cabernet Sauvignon on the red side. So yeah,
If you could travel back in time, what's the advice that you would give to yourself?
interesting one. Um, I think I think if I travel back to the beginning of Ecoligo, we have underestimated how difficult it would be to have our first project. Having our first project operational really took us more than 2 years. And we had thought in the beginning, like we know the markets, we know the partners. It's going to be super easy to have the first deal, and we will somehow manage it from here, being based in Germany. And in retrospective, I would have said, let's not bother about any setup here in Germany at all. Let's move straight to the countries, do the first deals there, hire people locally, and then set up your company. Because what is really key for setting up a company is that you have this proof of concept very fast. That is what took us way too long. Luckily, we had business angels and investors that have invested in us before we had the proof of concept. So that was really, again, thanks here to everyone participating. But yeah, that was lucky for us. But then you need to have this proof of concept really, really fast. That is important. That took us too long, and that advice I would give myself.
Yeah, that's something that I keep hearing. Like from 0 to 1, it takes ages, but from 1 to 10, it's much faster.
Yes, indeed.
Is there anything you're learning right now, like a new skill or a new hobby?
Like there's constant learning, and for me it's now we are a company of 60 employees. We have been a couple of months ago we have been 30 employees, and this from 30 to 60 is quite a significant step. So and I think like every stage that you go through as a company brings you as a manager and as a founder a lot of different learnings. So whereas at the beginning it's really like a bunch of friends and you know everyone super well. It's This is just not possible nowadays anymore. With 60 employees, you don't know each and every person super well. You know, of course, what they are doing and in your company, but it's a different type of relationship, right? And you need to take care more about establishing processes, thinking a lot about scalability, automation. Also a lot about documentation, like also documenting learnings, best practices, have really good onboardings for people. So it's a constant shift of focus, and you constantly need to learn new things because the organization grows. And I haven't, for me, it's the first time that I'm a founder. So for me, I'm learning while doing it, and that's super exciting. But it's of course also every day new challenges that you are facing.
That was also a super interesting answer. So if people want to find out more about ecoligo, they can check the website, ecoligo.com.
That's correct.
And if people want to get in touch with you, what's the best way, Marcus?
Best would be LinkedIn. Just
Okay.
check me on LinkedIn under my name, and that's best to reach out there to me.
So I'm going to put your LinkedIn profile in the show notes. Marcus, thank you for joining me today. It was a pleasure and wishing you the best.
Likewise, it was great talking to you, Christian. Have a good rest of the day. Take
Thank
care.
you.